All right, what's up, everybody? Good morning. Hey, we are jumping into today's call. Hopefully, you can hear me okay. It is a little bit windy out here, but I'm so excited to jumpstart this week with you guys as we run to new heights here in the month of April. It's been a phenomenal just month so far. Shout out to all of you guys that have new goals, new dreams, new aspirations, and I just love seeing you guys run together and just love seeing what we're building here at FFA. But I want to give a huge shout out to some top agents from last week. On today's call, we're going to dive into a Omaha IULE. We're going to talk about should you sell a universal life plan. So a lot of good things planned for you on today's call. But first and foremost, let's talk about these top agents who ran hard last week to put themselves in the top of the chart. Hey, if I time out on you guys know with this live feed, for whatever reason, when I share this screen, it just loves kicking me off of this thing. So if it freezes up or whatnot, hey, we'll jump right back in here in just a minute. But top 15 from last week, we had Kelly coming in and claiming her top spot. Big shout out to her, not only on the individual side, but also on the team production side. She's doing big things with team building. So nice work to you, Kelly. Big shout out to Jeffrey representing the South Carolina crew as he went out and had a phenomenal week himself. Dougie Fresh, like always. If you guys missed Doug's call, what was it, about a week ago, 2 weeks ago? Make sure you go back and check it out. He dropped a ton of tips for you guys. So make sure you go back through the feed and check out that call. But Doug with another phenomenal week. Beth, big shout out to Beth, over 4K for her on the week as she ran to just tackle new heights for herself. So I loved it. Beth reached out. We did a little coaching call last week, and then boom, she went out there and put up a ton of AP. So nice work to you, Beth. Big shout out to Aaron. Aaron's always in the top 15. I don't even have to post this leaderboard. I know I'm going to be saying her name. So Aaron, like always, juggling being a mom, being a wife, going to like 15 different baseball games for her kids like a day, and she still put herself on the top 15. So nice work to her. El Chapo leading the way, putting herself in the top 15. Nice work there. We had KZ. Hey, check it out. If you didn't see Kaylee's call with Jessica and Shamika on Friday, go back and watch it because they dove into how they set up a senior seminar and what all went into that. And it's led to a lot of production and a lot of success and a lot of appointments for them. It's kept them busy pretty much for like the next 2 weeks. So big shout out to her. She had a huge week. Sylvia representing the South Carolina crew too, with a phenomenal week. I think she was over 6,000 or 7,000 on the week for her. So great work to you. Jess Graham putting her name at the top of the chart. Way to go, Jess. Super proud of you. We had Rebecca, like always so far, year to date, leading the way. We'll see. March numbers are about to come out. We should have those numbers for you guys on Wednesday's call or Friday's call. We'll dive into the top agents of last month. Just waiting on a few more reports to get wrapped up there for March. But big shout out to her, putting herself in, I think, the top 5 on the week last week. And then Ray, like always, crushing it. Big things for him and his team as they're just dominating it here lately. We had Christy representing Team Honey Rock, put her name up there at the top of the chart in the top 3s. Super proud of you, Christy. Even amongst like moving, right? They just move like a far move, had a ton of things going on over the past 2 weeks, but she's still dropping the AP and doing big things. So nice work to you, Christy. We had Becca. Becca's just a front runner this year, not only in individual production, but also in team. Super proud of her. She always finds a way to make it happen. She was traveling to Missouri, then going back to Texas, and no matter where she was at, was able to lock down some production there. So nice work to you, Becca. My phone is pinging off here, so I'm going to shut that off and put it on silent. But big shout out to Dennis as he took home Agent of the Week again. You know what I love about Dennis? I love how focused he is every single day. If you ask Dennis, hey, what are you doing today? He's going to pull up a sheet that has everybody lined out on where he's going, who he's going to see. It was Saturday, and he hadn't hit his 12K goal yet, so he went back out there on Saturday and just crushed it. So nice work to you, Dennis, showing everybody how it's done. So top 15, way to go. Way to lead the way there, guys. And as we jump into this call, all right, before we talk about the Index Universal Life Plan, I wanted to share this picture with you guys. All right. It says, if there's a Goliath in front of you, that means there's a David inside of you. All right. So many of us uh, can relate to this picture, right? Maybe you woke up, it's Monday. All right. Maybe you had a flat tire. Maybe you spilled your coffee on you. Maybe your kid was running around like a wild kid, not wanting to go to school, whatever the case was, right? And going into a Monday morning, guys, the fact that there's a challenge out there for you to hit shows that you have something inside of you that's going to help you hit that. All right. I watched The House of David. If you guys don't watch that, I would encourage you go to, I think it's on Amazon Prime. Goes over the story of David. Really good depiction of it. But one thing I realized when I was watching that was how David was kind of tasked with this internal struggle, right? Of wanting to prove to his family that he could be a warrior, wanting to prove to his family that he was more than just a boy, more than just a shepherd. All right. And then this massive giant, all right, threatens his whole way of life, threatens his whole community, and he stands up to it. He's not built, right? He's not huge. He's not muscular. He wasn't a warrior like his brothers, but he had complete faith in God that he could take whatever he was up against. All right. Now, I know this story can relate to a lot of different things, but you know what's really interesting is how one rock changed the course of David's entire life, right? There was a challenge in front of him that he had to have enough courage to go up and face. All right, but God gave him a rock to do it. All right, no warrior had ever used a slingshot like that before, but he used the tool that God had given him to take down the giant. And I think that you have a tool right now in front of you that will help you take down your goals, the challenges you might be up against. All right. And you just have to figure out what that tool is and use it. All right. And have faith about it. Maybe you're running towards financial freedom this year. Maybe you're running towards being out of debt for the first time ever. All right. In your life. Well, maybe that tool sitting right in front of you is that PDF of leads that you got to go to today. Maybe it's the PDF sitting on your desk of all the people you got to follow up with today. There's a tool in front of you that God's given you, right? But it's up to us to take it and use it like David did and have faith that it's actually going to work, right? Notice when David went up against Goliath, he didn't sit there and doubt if his slingshot would work, right? He was prepared. He practiced with it. He knew that God would help him be able to use it. And same is true for us and what we're running for every day. So think about that, guys. There's one rock, right? The rock changed, all right, the course of history for David. And you have a rock right now that you just got to pick up and use, all right, and run for it this week. And don't give yourself excuses. I promise you, David probably could have thought, well, what if the rock doesn't hurt Goliath? What if I don't hit him? What if I miss? What if it doesn't work? What if I actually got to fight this dude? He's obviously going to kill me. He didn't think about those excuses. He didn't run away. He just faced it head on. And you can do the same thing with whatever is set up in front of you. But without further ado, guys, we're going to talk about an Index Universal Life Plan and if agents should sell it or not. All right, this is a big question because for the longest time, Index Universal Life Plans have gotten a bad rep, especially with people as they age out of those plans. I know you guys have ran into these before where your client paid into a policy for 30 years. And here they are sitting at 75 years old. Their cash value is going down. The plan's going to expire. They're unhealthy now. They got to get something way more expensive. You've seen the negatives to an Index Universal Life Plan, but you might not have seen the positives if it's set up correctly. And that's what I'm going to dive into on today's call because the industry has changed when it comes to these plans, right? There's three different types, right? You guys know this. You got your term insurance, which is going to be for healthier people, large death benefit, low premium, but it's going to change. It's going to last 10, 20, 30 years and then change or terminate. You've got your whole life, which is going to last forever. All right. But it's generally lower death benefits, higher monthly payments. All right. Build cash value. But sometimes you meet a client that doesn't fit into either one of those. Okay. You meet a client who wants permanent coverage. They don't want to lose what they put into something, but they can't pay, nor do they want to pay the high premiums associated with whole life. Or maybe they want a higher death benefit, right? And so there's this gap. And if you as an agent can fill that gap, it's going to be some of the best clients that you've ever sat with, some of the best clients that you've ever been able to help. But you can only do that if you know the product, you know how it works. And a lot of us overcomplicate what an index universal life plan is, just like we overcomplicate what an annuity is. All right. And if you can be well versed in this kind of insurance, you're going to find that you actually are running into a lot of people every single month that could actually benefit from this type of plan over a whole life plan or over a term plan. It's kind of the middle ground that could really help people out, only if it's set up correctly, though, right? So, how do we do that as an agent? The one plan that I'm going to talk about with you guys on today's call is one of your favorite carriers. It's one that we write the most of, right? But it's Mutual of Omaha. And Mutual of Omaha has a plan. It's called the Index Universal Life Express Plan. I'm just going to pull this agency chat up. If you guys have questions, drop it in the comments or the agency chat here. But the reason I wanted to go over this plan with you guys is because it's very simple to write as an agent. And it's very simple for you as an agent to be able to help your clients with this product. And it's very simple for them to understand it and how it works. So, guys, let's talk about an index universal life plan in and of itself. What does the word index mean? Okay, it means that the insurance company leverages that person's cash value, the premiums they're paying into, right? Everything into index funds. Now, they're not actually taking their money and putting it in the market. It's almost like collateral. All right. Picture them like using it as collateral in a sense. They take whatever the value is, all right, and they allow the client to participate in the index fund growth. So the way the cash value is growing, the way the policy performs is based off of the index funds that the insurance company is comparing it to. Okay. Now, that's all it is. And believe it or not, there is a difference between an indexed universal life plan and just a regular universal life plan, right? There's a difference there. The difference is the index goes off the index funds. On the other one, it doesn't, okay? It might just be a fixed rate, might compare it against something else. So index universal life plans really have two purposes that I want you guys to take away from this call. Number one is for your client who wants life insurance. They want to build cash value. They want a permanent type of plan, maybe a higher death benefit, all right, at a lower cost compared to whole life. That would be one situation. Another situation for an index universal life plan is the client who wants to be able to draw money out of it at a later date, tax-free. You guys have probably heard the term tax-free retirement. All right. And so the way these plans are structured and situated really depends on what that goal is for your client. Do they want the insurance aspect of it? Or do they want maximum cash value growth and maybe a lower death benefit to do that? So, how is this plan structured for your client? How does the insurance company come up with numbers? Okay, I'm going to try my best to make this super simple. It's kind of hard, like without showing you on a whiteboard, okay? But the way it works, your client picks a death benefit amount. Let's say they want $100,000 of insurance. That death benefit at the age they're taking this thing out at has a premium. With Mutual of Omaha, if you go on their quoting app, right, the quoting app, you download it right to your phone, click on IULE, play around on it. But let's say it kicks back a premium. It's called the Easy Solve Premium. What does that premium mean? It means that amount of money that they pay into it initially will guarantee that this plan will last a minimum of 20 years. That's what the Easy Solve Premium does when it kicks back. That's the one that you guys should be going with for the most part. All right, so it's not the lowest the client can pay. It's also not the highest, but it's the middle ground that's going to make that thing last at least 20 years. And theoretically, it should last longer, right? But it's going to have a guaranteed rider to last 20 years. So your client has 100,000. They have a premium they're paying. Now that premium gets split up. Okay, let's say their premium's $100 a month. The way that that works is your client pays $100. A portion of their premium goes to pay for the insurance, and another portion goes to their cash value. How is that figured up, right? How do they come up with that number? Well, it's simple. Based on your client's age, there's what's called cost of insurance. I know you guys have heard of that. That's what the insurance company says it's worth to insure that person at that age for that death benefit. So let's say in this case, the husband here in the picture, he's got 100,000, his payment's $100 a month, and his cost of insurance is $30 a month. That means every month he pays 30 bucks pays for the insurance, and the difference, the $70, goes into his cash value to build that value up. That value is leveraged with the index funds to hopefully grow it every year with interest. Okay, almost as if you had your money in some type of stock market fund. All right, almost, not exactly like that, but similar. So that's how that works. Every year he gets older, that cost increases, which means if he keeps paying $100, right, lower and lower amounts going into the cash value. But hopefully he funds it enough, he overpays that cost of insurance enough that he has enough cash value in there to last him forever. All right. And so that's how these premiums are set up. That's how they work. They're flexible premium plans. Okay. So that's how an index universal life works. It's different than a whole life, and it's different than a term plan. That's why some of these plans got such a bad rep, because people were only paying the minimum and they were getting older and they didn't have enough cash to keep the plan lasting, and they either had to substantially increase what they were paying each month or their insurance just canceled out altogether. So as long as your client is paying the Easy Solver up, they're going to have a good plan that lasts them. If they're paying below that, their plan's going to run out. They're going to have to change this up, right? So that's what you need to be aware of. That's how you should explain it to your clients when they're looking at this type of coverage. So let's talk about what the IULE is and how it works. Well, it's real simple, guys. An IULE is an Index Universal Life Express. Express means your client's not doing a medical exam. They're not getting blood work taken. It's not taking 3 months, right, for this thing to go through underwriting and to get approved. You write it just like you write their final expense plan off the agent portal, go into iPipeline. Easy. You get an immediate decision right on the approval. So it's an express plan. And it's a very good option for somebody who is healthier. Okay, maybe they're only on a handful of prescriptions, and they want a larger death benefit for a lower monthly cost. Okay, so let's talk about ages of this plan. All right, guys, there it goes up, pretty high in age, but you want to really leverage like what that premium is going to do compared to what the cost of insurance is, what's going to be better, right? As they get older, let's say they're talking 70s, 80s, a lot of times when you look at the premium for IULE compared to like your fully underwritten whole life plan, they're pretty close, right? So maybe whole life's better in that situation. But let's say you have, somebody in their 50s, and they want 150K. They're pretty healthy. This is the perfect avenue to go for them. Let's say they're in their 60s, but they're very healthy, uh, maybe just taking blood pressure pill. They want a larger death benefit than what the whole life options will provide them. They don't want to go through medical exams and underwriting. This is a great plan, okay, for them. So what's very cool about the IULE is that there's a 20-year no lapse pretty much guarantee built into this thing. So if they pay on this plan, all right, and they make their easy solve premium payment, it's going to last them a minimum of 20 years. All right. And I want to say it goes up until age 80. So whichever comes first, right? So if they take this out at 70, then their no lapse guarantee is going to be 10 years. But if they take it out at 60, it's going to be 20 years. So it's whatever comes first, age 80 or 20 years for that no lapse guarantee. All right, let's go to the next page here. So growth potential. All right, I'm gonna do my best not to make this boring for you guys. All right, but I wanna dive into these titles because a lot of you have seen these, whether you've been doing annuities here lately, whether you've been looking and reviewing their current insurance plan, but you might not understand what they mean. Okay, but let's talk about the terms inside of an IUL and what they mean. Okay, participation rate. Guys, anytime you see participation rate, what that means is that's how much percentage of an increase is what the insurance company is offering that person on their money. So let's say they have $1,000 in their cash value, they're funding this thing, the market's doing really good, right? And let's just say the fund like grows to 30%. Well, the participation rate is the rate that the interest company credited to your client. Okay, so inside of these plans, it's not like an IRA or a 401k where like you just get all the growth or all the loss. That's not how these work. You get some of the growth, not all of it, but you don't get any of the loss. Okay, it has a participation rate. So maybe that rate is 10%. That means that's the maximum that they're going to go. All right, that means if you see on your annual statement your client got credited 10% this past year, that was their participation rate. That's the how much in interest they were credited. The cap rate is the maximum the insurance company is going to give them. So maybe their cap rate's 15%. That means it doesn't matter if the market grows 150%. The most your client's going to see is 15. That's how the insurance company can afford to not give them losses when the markets go down because they keep the difference, right? That maybe the market grows 100%, your cap rate's 15, the insurance company has made 85%. All right, but it's not a bad thing, right? It's a win-win as long as you understand that and your clients understand how that works. The floor is going to be the minimum interest that the insurance company will credit. So cap rate's the highest amount, floor is the lowest amount. And so sometimes it might be zero. All right, maybe your floor is zero. You're not going to go negative, but maybe it doesn't grow at all if the market doesn't do good. A lot of these plans have what's called a fixed rate interest option, which means a portion of their money could be allocated into a fixed rate, which is it might not, maybe it's 1%, 2%. Well, that would be the floor. That means even if the market does horrible, it doesn't grow, insurance companies still crediting you the fixed rate of 1, 2, 3, 4, 5%, right? So that would be the floor, is the lowest, okay, that would be. A segment, okay, it's just a portion of interest. It's right on here. You guys can screenshot it, right? All right, it's a portion of an index account that might be credited based upon performance, all right, of the newer segments credited each month. So don't get too involved into that, into the definition of that. Don't get too involved into the definition of any of these things. But what you guys want to explain to your client is you're going to participate in the growth, but you're not going to participate in the loss. So a lot of your clients would love to put their money into something that solves the need of insurance, but they're also growing money that they're not worried about losing it. All right. I don't know if you guys have any 401ks or IRAs, but if you do, you definitely probably lost money over the past 2 to 3 months. All right. I know I did in Mars. I was going to go back up eventually, not a big deal. But in this type of a product, you wouldn't see that loss. So that's a key, man. A lot of people don't like the idea of them losing their money. And this is a product they could put it in to where they're going to get some of the growth, not all of it, but they're not going to get any of the losses either. Okay. But you have to make them understand that this is only a good product for somebody that also wants the insurance aspect of it. All right. I think that's very important, guys. You don't want to just sell these things as like a retirement plan because in all reality, that's not what they are. All right. That's not exactly accurate for agents that sell these like that. You got to understand that you're getting charged each month for insurance, first and foremost. And now you can play with that amount so the most of your money's growing, but no matter what you do, a portion of your payment is a fee for the insurance. So I wouldn't sell this to somebody that didn't want insurance, right? I tell them go put your money into a CD at the bank or you know, 401k, or I tell them to put their money at a financial advisement firm, right? If all they wanted was the most amount of growth. I think these are very good retirement solution type plans as backups to those, and as somebody who needs insurance and needs that, like, hey, it's a perfect. But if you don't need the insurance, then you gotta weigh that out, right? Like everybody that sells these things, that's like, hey, you put this money in there, and you're gonna withdraw tax free millions and millions of dollars when you're 60. I don't see that happening, right? But it's a good plan that could do that. But you got to make sure they understand each month they're getting charged for insurance. They got to value the insurance aspect of it as well for it to be ethical to sell this thing. Okay. So just think about that. It's something that I think a lot of agents don't understand that they should. And when you explain that to your client, they love the concept of it. I think clients value an agent who is going to tell them the good things of these and who's also going to tell them the bad things of these so that they can make an educated decision as to if it's good for them or not. And a lot of times, guys, when you're transparent with your clients, you talk about the cost of insurance, you talk about who this is for and who it's not for. Almost all the time, they really appreciate that and they buy one, right? It's amazing. But if you just sell it as it's the best thing in the world, like it's going to grow better than the stock market, it's not, right? But they're going to have money in something safe. So something to think about there. The way the interest rate's credited, very simple. Their cash value is a certain amount. Depending how the index fund does, that's how they get their interest credited, right? With the participation rate. Very simple to understand that. Okay, let's talk about the other benefits of this plan. And this kind of ties into, should you sell this to your client? Guys, this is a really good plan for somebody who, like I said, values the insurance aspect. Well, with that aspect comes riders that could really benefit them. Let's say you're sitting down with a client, they're like, yeah, I like the idea of putting my money in something that will grow. I'm not going to get the losses. I could draw it out tax free down the road for myself or for my kids, right? Well, another big benefit of this is the riders that come with it. So terminal illness rider, your client gets a terminal illness, they get access to their death benefit while they're living. Chronic illness, same thing, critical illness, right? So you have a lump sum of money immediately available for life events that people aren't planning for. All right, let's talk about a regular retirement type of an account versus this. All right, well, if I opened up an IRA right now, the only money I would have there is the money I put into it with whatever it grew, right? So let's say I open it up, I put $1,000 there, that's all I've got. If something happens to me, that's all I have access to, right? But on an insurance product, let's say I take out a $500,000 IUL, or a $350,000 IUL, and I make one payment into the thing, and then boom, I get one of these chronic illnesses or terminal illnesses I have access to all of that now. And maybe I only made one monthly payment into the thing. So it gives your clients immediate access to a large portion that normally could take them a lifetime to have to save up. So when you're sitting down with your clients, you just talk about these things. Should an agent sell this? Absolutely. You just got to make sure you're selling it to the right client for the right reason, so that they understand how it works, right? Like if you're sitting down with Miss Betty, okay, and Miss Betty is 75. She's on a bunch of health conditions, bunch of prescriptions. Is probably is not the right plan for her, right? You're sitting down with Mr. Jack who just turned 70. He wants a $20,000 plan to just cover a burial. That's all he wants it for. Whole life's most likely the way to go, right? But you're sitting down with 55-year-old, Mr. Jack, who has young kids still. He has, grandchildren. He's got a mortgage on his house. He needs $250,000 to cover that for his wife. All right, this is like the perfect product for him. He's pretty healthy. Maybe he's just taking a handful of prescriptions. This is going to give him the most coverage for the best price, really fulfill that need that he needs, right? Mr. Jack doesn't need to take out three different whole final expense plans to get to 250, right? He can just take out one, have a consolidated payment. So, should agents sell these? Absolutely. I just wanted to dive into how they work for you guys so that you can be educated in the house. Now, let's talk about how simple they are to write, and we'll wrap up the call here. Guys, very simple. You quote it on your phone just like you would a final expense plan on the Omaha app. All right, to do the application, you just log in, go to iPipeline, click Universal Life Products, fill out the e-app. It's identical process to the kids app or the final expense app. Might be a little bit more medical questions, but that's there. Talk about underwriting. I'm not going to dive into that on today's call, but just understand, um, they take a lot of different conditions, right? Just your normal, healthy blood pressure, maybe cholesterol, different things. They're not going to take anything crazy. They're not going to take, you know, COPD and dialysis. They're not going to take any of that, but something just normal, blood pressures, little stuff here, they're going to accept it. So think about that, guys. Think about the clients you've helped. Think about their children. Think about the referrals you get. These are great plans for people to talk about, and they could really help your clients put them in a good permanent situation. Just bridges the gap between whole life and term life. So that's all I got for you guys on today's call. I appreciate y'all for jumping in here. I know it was a lot of information, but hopefully it helped you. If you have any questions on this, go to the agency chat and type them in there, and I'll do my best to answer them for you guys. But I appreciate you guys for tuning in. Let's go crush this week, and we will be back here on Wednesday.